with him to understand where he feels markets are headed, why foreign institutional investors are back, and if they are back, more importantly, are they here to stay? Manishi, July has been nothing short of a dream month. Double-digit gains for your global markets, almost a 9% gain for Indian benchmark indices. Do you think the bulls are back, and more importantly, are they here to stay?
It's too early to conclude that, because we are not yet out of the woods as far as earnings downgrades and potential outflows as a consequence of QT in the United States and rate hikes are concerned. So I think there were two things that worked in favor of India, or in general for Asian emerging markets. Number one, we had the Fed statement, despite a 75 basis points hike. There were potential, I would call it hope at this point of time, not exactly a strong anticipation of some degree of peaking out of the rate hikes towards the end of this year. Chair Powell also used the phrase soft landing a few times in his speech. And second, and this is more relevant to India and the fuel importers, we have seen fuel prices, oil prices, sort of plateauing out at somewhere around $100 to $104 to the barrel. So the concerns about the current account and trade deficit expanding and therefore putting additional pressure on the rupee, they have been allayed to some extent. Now that said, as I reiterated earlier in my discussions, that we are not clearly out of the woods. So this sharp rally that we have seen, I think at least in the short term, potentially offers some profit booking opportunities for investors.
Okay. So, why is there a change of heart, Manishi? My question is that the concerns about valuations, concern about inflation, high commodity prices, rising interest rates, they were there in June and they're still there in July. But the
Right.
but markets in a sense have managed to climb the wall of worry.
I don't know whether that's a conclusion that we can arrive at yet. Because this climbing the wall of worry, okay, on a short-term basis, yes, it has happened. But once we get more data points as far as the U.S. Fed commentary and also some of the other data points like inflation and employment over there, then this narrative about a potential recession towards the end of this year or early next year can again gain ground. So I think it would be too early to conclude that markets have climbed the wall of worry. Over a short term, over the last 1 month or a few weeks or so, maybe yes. But, if we're looking at the rest of the year, over the next 2 quarters or so, I think we still have to hold our horses as far as reaching that conclusion is concerned.
But as the dust starts settling down, we have, of course, have an earnings season before us. Now, it's pretty clear in the earnings season, IT, yes, it's been battered down, but look at all the IT companies and the revenue growth that they're talking about. Banks, you've got, historically low NPAs, you've seen credit offtake and disbursements also on the mend and going up, actually. So, Manishi, can I ask you, as the dust is settling down, what are the sectors that you folks are looking at?
You rightly pointed out one particular aspect of this earnings season. In fact, over the next 1 or 2 months, I think watching the earnings season all across Asia would be the most critical data point that investors would be focusing on. In case of India, we have seen the big IT companies, the frontline banks reporting results. And, it has been a mixed bag. So in case of IT companies, we've seen strong order inflows leading to strong top line growth, but obviously a negative impact on margins as a consequence of outsourcing the development work that the IT companies are now being forced to do. So I think investors would have to be careful. It's not even a sort of a common thread running across sectors or a broad sector-specific picture is possibly difficult to paint at this point of time. Within sectors, investors would have to search for companies that are high quality, who are generating cash, and where the concerns are largely behind us. So for the banks, for example, we have seen the private sector universe where the concern about non-performing loans are largely behind us. The asset quality is improving. Even the loan growth is the overall loan growth is about 13 to 14%. It's climbed significantly. So that's one universe that we're clearly focusing on. We're a bit more selective on IT, where we do like some of the frontline companies who are able to reinvent themselves and therefore sort of cushion the negative impact on their margins. We also like some of the consumer discretionary companies, particularly autos, which had been underperforming for quite a while, but now we're seeing discretionary consumption coming back, and we have recently highlighted this as affluent consumption in India. I think that's going to be the theme over the next few years. So those are some of the pockets in India that we are now focusing on. Fortunately, the Indian market is wide and it's deep. Therefore, it offers quite a few investable pockets, investable silos to institutional investors.
What about energy stocks? We've had an energy shock, right? And as we recover from that, and the world also recovers from that, how should one approach that, if at all? Are you doing it through conglomerates? Are you looking at pure plays?
So till recently, we were quite positive on the energy universe. But over the last month or so, we have sort of pruned our exposure to the energy universe, and we have taken out some of the pure plays. We still have the conglomerates in our Asian model portfolio. The conglomerate energy exposures in India tend to benefit not only from energy prices or refining margins, but also from the industry concentration in telecom, as you would appreciate. So I think broadly one could say that the extent of bullishness on the pure play energy exposures have been trimmed down slightly, even though we still continue to maintain exposure to the conglomerates.
Right. So Manishi, where is it that you're finding opportunity right now? Is there something that after this market recovery of 8.5%, 9% that we've seen in the month of July alone, are you buying anything afresh?
I think the kind of exposures that I earlier talked about, which are essentially private banks, autos, and some pockets of energy, in terms of both telecommunication and exploration and refining, that would really sum up. And of course, I forgot to mention the IT services, the frontline leading IT service companies also. That would really sum up the India silo in our Asia ex-Japan model portfolio. We are overweight India, and we have been so over the last 7 to 8 months. It has stood us in good stead. India is one of the outperformers this year among the large markets. But as far as adding new India exposures are concerned, we would possibly hold back for now after this sharp rally.
Okay, Manishi, great to have you on the show. We'll let you go on that note. Good speaking with you and to get in your thoughts as always. Let me just refresh the market screen and tell you where is it that we've